People have a real problem with that because as much as they should be happy that they gain 3, 4, 5, $10 million in equity and should be happy to pay the tax bill, no one wants to do it. No one wants to write that check.
So I want to shift a little bit into the largest wealth transfer in the history of the planet, right? You've sold over $2 billion with your team. You did $292 million in 2021 alone. And by the way, this is the South Bay, Hermosa Beach, Manhattan Beach, Palos Verdes, and other areas as well. But that's the main area for the team there. And we're seeing baby boomers, right? The largest wealth transfer in the history of the planet. It's, some estimates, Ed, say as high as $32 trillion is going to pass from the baby boomers to millennials in the next 20 years. And no time in history do we know of more wealth that's ever transferred in one generation. And number two stat that's really interesting is 50% of that wealth, Ed, is tied to high-end primary homes, of which, the South Bay or Silicon Valley, parts of San Diego, of course, parts of New York, some of the highest concentrated, highest appreciated assets in the history of the US. Okay. And then the other part of that is commercial real estate and private equity, which is businesses. But these are all illiquid assets that people are wanting to sell. Sometimes I hear from clients, they feel real estate rich and cash flow poor, right? Or they feel like all of their eggs are in just one property, right? But they feel trapped by this capital gains tax, which in California, it's about 13.3. Federal is about 20. If it's investment property, you can add some Obamacare to that, 3.8. So my question for you is, what's the biggest frustration, Ed, when it comes to sellers who want to sell prices that sell houses that have quadrupled in value, but they have this huge capital gains tax? So what do you find your clients saying?
What they're saying is they don't like their Uncle Sam, because he wants to take all the money when they sell. And people have a real problem with that because as much as they should be happy that they gain 3, 4, 5, $10 million in equity and should be happy to pay the tax bill, no one wants to do it. No one wants to write that check. It just doesn't feel right. People have counted that value as their personal equity. When you look at their net worth, they're counting it, right? I have a $12 million net worth and I got $8 million in real estate net worth, until they calculate what happens when it sells, and they got to write that check to Uncle Sam. And so dealing with that frustration that they're going through is a conversation we have all the time.
Yeah. So talking through that, right? So I started out at Marcus and Millichap, and we learned about the 1031 exchange. And as you know, it doesn't qualify, never has for a primary, at least in my history of the 1031 for years. And so people are on these primary houses, and either they got to rent it out for a year or two, and then they have to 1031 into something else, and then they have to become a landlord just to defer the tax. Now we learned about something called a deferred sales trust, and we think it'll change the industry forever, and it already is and is doing that. Just most people don't know about it, where you can sell a high-end primary home, defer the tax, and then invest it into cash flowing producing assets, stocks, bonds, mutual funds, or real estate. You can't use the money to buy a primary. That's still taxable. You can use a portion of it to do that. But I'm curious, in your experience, what have been the strategies that you've helped your clients? Maybe, you're not going to give tax or legal advice, but what are some of the things that you've worked through with them that have actually been kind of a home run for them when it comes to exiting capital gains tax way that's smart?
Well, let's say a couple things, right? One, honestly, we end up focusing on what is it that they really want, right? It's more of a personal conversation. Like, what really is important to you? Is the tax the real problem? Or what is it you're trying to gain? And people are usually trying to get rid of some pain and go towards some pleasure of some sort. I dig down and try to figure out what those two things are, like the burden of maintaining the home and the pleasure of living near their grandchildren, right? That might be an example. Is that more important than the tax they pay? So for me, not using the deferred sales tax structure very often with clients yet, until I learn more from someone like you about it, I'm just trying to get them through the willingness to write the check to get the benefits they want. Other than that, I've had, and the laws have changed, but I did have clients that took advantage of the 1031 exchange and would rent their house out for a year and a half, then 1031 it into something else, have that income producing asset, and then move into it over time and then get $500,000 tax free because they're married. They used to be able to do that every 2 years, but the IRS changed that law. You can only do that every 5 years when you're moving from house to house to house. And that's a long process and a pain in the butt, to be honest with you. Other than that, it is just discovering alternative tax protection methods. And, back to what I said in the beginning, it's going out there, researching, educating yourself, talking to your CPA, talking to your wealth advisor, and finding experts that have those tools to figure out how to do that, and if it fits within your risk profile.
Yeah, thanks, Ed. Yeah, we call it the shotgun wedding, right? The 45 days to identify, 180 days to close, or even call it like the, when you got to like move out and do that, it can just be the blockbuster way of exit planning, right? It's just not very efficient. It's typically either moving you into more pain or more potential pain, right? Because you time it wrong. Whereas with the deferred sales trust, what's really cool about it, if anyone wants to learn about it, go to capitalgainstaxsolutions.com. We call it the Netflix way of exit planning, because not only can you sell, defer the tax immediately, but then you can dollar cost average into different investments. You could put it back into a business venture. It also works for cryptocurrency or business sales or investment real estate. It can save a failed 1031. And each of these asset types can go into one another. And there's none of the timing restrictions. You have no 45, 180. It's really incredible. And people want to learn about it. You can go to capitalgainstaxsolutions.com.